Discovery is next. Now, hell, Discovery is about one of South Africa's most exciting and successful companies. Everybody loves Adrian Gore. Literally everybody does. However, in recent times, having kind of gone as high as about 150 rands a share, it's sort of languishing after some results that people perhaps were slightly underwhelmed by. Market capitalization, what is that? It is about, I was about to guess, but let me rather read, 76.5 billion rand. So not small. Price earnings ratio 21.11. Dividend yield rather paltry at 1.5%. So, yes, I mean, they've got all these international things going on, and it was evident that they needed to spend a bit more money getting them to the next step, particularly the UK business. And I suppose people have expected explosive growth from these guys because that's what they've usually delivered.
Yes, by far the most innovative financial services company in South Africa, named the 17th, I think, Fortune company to changing the world recently. I think that pushed their share price up to 150. But reality hitting a little bit with the latest set of results. 7% increase in normalized HEPS. They have this concept of normalized HEPS they use quite heavily. So where you saw quite a lot of pain, let's say, in the results was in their new ventures. Discovery Insure is why it fits into this discussion today. They don't show that separately, and there's a lot of sort of discussion, how much is that business actually losing, because I believe it is loss-making, and they've got the Chinese venture in there.
That's
and
the Ping On thing, which is more into medical-related health insurance.
Yes, health insurance, correct.
Vitality.
Yes, and so you saw a big increase in the losses in those sort of, let's call them new ventures. I think they call them innovative or emerging or whatever. Their core business is doing quite nicely.
And the core business is the medical aid administration, but more especially the life insurance business linked to that. And obviously they get to good profitability because of the vitality thing, and everyone's trying to stay healthy and earn points.
Correct. And then they said there were a lot of costs related to their business, which they've renamed in the UK, called Vitality, using that as their
which is the old Prudential medical insurance business, which they're again linking a life cover business to, and they're also trying to kind of go in there in that industry, in that country, as a mainstream first tier operator.
So it's sort of a mixed set of results. They've got very strong businesses in South Africa. Whether they can keep growing those at a rate, I'm not sure. I don't think so, because their penetration is so high. So you would have to say, can they get the Discovery Insure business right? Can they get it profitable? And then really there's a lot of upside. And of course they've announced that they're going into banking, which is quite exciting.
Yes, which is an extension of the existing relationship with the Discovery card that they have with FNB, which is sort of like their historic parent. But I think you're right. I mean, I carry the Discovery card. I like the fact that it's a Visa thing, and I'm invested in both companies. But it does have an online presence, which is a bit of a kind of sub. You can look at it at both the FNB and their site. But I'm expecting that in time that will be a more full-service type financial offering. And
I think they've bought that business from FNB.
So they've invested more in it.
So they own that Discovery card business, and they really want to roll out that banking, but I think in a smart way. So still very innovative, moving into banking. It's quite a big play. And can they get the growth engine going
Well,
again?
that is the real question. The share chart will reveal what we're talking about. It's not such a big fall off, really. So you're right, it does get there, but then it wobbles around. And remember, in December, the same thing was happening to them as was happening to all the financials, people worrying about politics and finance ministers. So I guess the real question, Lance, is this the beginning of a general de-rating of the stock, which is going to kind of run over the next few years, or is it this is just a brief pause that refreshes before the share price flies higher again?
It's a good question. I think the market will be more demanding of results. I think before the benefit of the doubt was given, they had a really strong track record, but now the market's saying, give us the results and we'll give you the rating. It's quite highly valued relative to its embedded value, because that's
compared to its peers, very much so.
Exactly, it trades at a substantial premium to embedded
the
value.
South African life insurance.
That's right, generally embedded
But those
value.
other guys don't have these exciting joint ventures with AIA and Generali and John Hancock, and making money, and Ping On, which is an incredibly substantial and potential market.
So I like it for the upside and for the potential upside. I do like it.
So you're still going to go hot on it?
Still hot on this.
Good, right.